Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's webinar is all about questions we get every single day, particularly what is the deadline for a solo 401k contribution? Most people, including tax professionals, get this wrong. Stick around because I'm going to show you I'm going to show you exactly how the deadline works for employee contributions, employer contributions, as well as voluntary after-tax solo 401k contributions, and of course, Roth solo 401k contributions. And also the rules are different for sole proprietorship, S corp partnerships, and LLCs. So understanding these deadlines can save you thousands in taxes. So this is your chance to ask questions. Type them over now so that we can be sure to get to them all. So let's first talk about the eligibility requirements for a solo 401k. For those who are looking to open a solo 401k plan, for example. So a solo 401k is for owner-only businesses, as long as the business does not employ any non-owner full-time W-2 employees. So anyone who works 1,000 hours or more who is not an owner, but rather a common law employee who's W-2 and works 1,000 hours or more. Of course, if it's an S corporation, you as the business owner can be a W-2 employee of the S corporation. We're talking about non-owners in the business. If you're a non-owner in the business and you hire an employee who's W-2 and he or she is not an owner in the business, and if that individual works 1,000 hours or more in your business, then you would not be eligible to open a solo 401k plan. You can always exclude those who are under age 21, regardless of how many hours they work. Okay, so that's number one. You always need to make sure you're eligible before you can open a solo 401k. So again, we're talking about what is the deadline for a solo 401k contribution. So let's talk about employee deferrals. So if we're talking about an employee contribution, also known as a salary deferral, that contribution can be made by your business tax return due date plus timely filed extension. So if you already have a solo 401k plan, you can wait till next year to make contributions for this year. So you would have until April 15 of next year, or if you file for an extension, October 15 if your business is a sole proprietorship or an LLC tax as a sole proprietorship. That's true for both employee and employer contributions. On the other hand, if you're looking to open a solo 401k for the first time here in 2020, the year 2025, then, and if your business is taxed as a sole proprietorship, then it's going to be best to open that solo 401k by December 31st of this year, 2025, which means you simply need to sign the solo 401k adoption agreement, and you'll be able to wait till next year in 2026 to both open the holding accounts and make contributions, including employee contributions. But if you wait till next year, you're an LLC tax with a sole proprietorship, or if your business is a sole proprietorship, then you can wait till April 15 of 2026 to open the plan, and you can still make contributions for tax year 2025. However, you're going to have to make employee contributions by April 15 of 2026 if you wait to open the plan in 2026, but by April 15. You'll still be able to make employer contributions as well as profit sharing contributions up to your up until October 15 of 2026 for 2025. And you can also make voluntary after-tax solo 401k contributions by April 15 of 2026 for 2025. If you wait to open that solo 401k plan in 2026, and those last two contribution types, the employer and the voluntary after-tax, you can open the plan all the way up to October 15 of 2026, but you're going to have to make both the employer and the voluntary after-tax contributions by October 15 of 2026. So bottom line is, it's best to not procrastinate if you can still open a solo 401k plan here in 2025. Obviously, if it's after tax year 2025 and you're listening to this webinar in 2026, then you need to be mindful of those rules where, again, if your business is a sole proprietorship or an LLC tax as a sole proprietorship, you need to be aware of that April 15 deadline so that you can make all three contribution types. That's the employee, the employer, and voluntary after tax. But if you wait till after April 15 of 2026, but by October 15 of 2026 to both open and fund the plan, you're only going to be able to make voluntary after-tax solo 401k contributions and employer contributions, not employee contributions. I know it's quirky, but if it's an S corporation or a partnership, or an LLC tax as a partnership, or LLC tax as an S corporation, then you're going to need to open the solo 401k plan by December 31st of this year, 2025, so that you can preserve the right to make all three contribution types in 2026 for 2025 by your business tax return due date plus timely filed extension. So for example, if you open the plan by December 31st of this year, which means you simply need to sign the plan documents by December 31st of 2025, your plan is effective for 2025, and you're going to have until September 15 of 2026 to make all contribution types, employee, employer, voluntary after tax for tax year 2025. And if you file for a timely tax return extension for your partnership or S corporation, you'll have an extra 6 months. So you'll have until September 15 of 2026 to make all the employee, employer, and voluntary after-tax solo 401k contributions for tax year 2025, as long as you set up the plan by December 31st of 2025. You can contribute all three contribution types. And again, setting up the plan in the eyes of the IRS regulations means you need to adopt the plan, sign the plan documents. You can learn more about that adoption deadline by visiting IRS publication number 560, the publication for solo 401k plans. There's a chart, I think on page 2 or page 3, that talks about the deadlines for each contribution type. And it also has a little caveat at the bottom how it applies to solo 401k plans, because solo 401k plans are now subject to Title I of ERISA, and therefore you have more time to make those employee and employer contributions than you would if this was a traditional, that is full-time employer 401k. Okay, it looks like we've got some questions here. Let's take a look at those and then we'll circle back here. So here's a question. When setting up a bank account for the solo 401k, is there anything specific I need to know? Great question. The answer is yes. Let me share over a link from our website that goes over those items of what to watch for and what you need to do when you open that solo 401k bank account. Give me a moment here. And then I'll give you a high level answer as well here. So here's the link for opening up the bank account for the solo 401k. Bottom line, a solo 401k is a retirement trust. Therefore, it's going to have its own separate employer identification number. You cannot use your social security number, nor can you use your business EIN number. That EIN number is specific to the solo 401k, and it's important when opening up the bank account for the solo 401k or the brokerage accounts. It's also going to be important to have that EIN number for that solo 401k when we issue a form 1099-R for the Mega Backdoor Roth conversion, or any conversion for that matter, or if you take a distribution from the plan. When you issue that form 1099-R, you have to list both your social security number on that form 1099-R and the EIN number for the solo 401k plan, not the business EIN. But when you open up that bank account for the solo 401k, it needs to be opened up in the name of the solo 401k using the EIN number for the solo 401k. Now, if you're going to have multiple holding accounts in the plan, you're going to need separate bank accounts for each source. So here's an example of a one participant plan. So the plan would be sponsored by the self-employed business, which would have its own, and the solo 401k plan would have its own EIN number. If you want to make pre-tax solo 401k contributions, Roth solo 401k contributions, or voluntary after-tax solo 401k contributions, you need to open up 3 separate solo 401k bank accounts. So it's not 3 separate plans. It's one solo 401k plan that allows for these various contribution types, but you are required to separately track each contribution source. That is the pre-tax funds, the Roth funds, and the voluntary after-tax funds, and you do that by opening up separate bank accounts. And this Roth solo 401k bank account is going to be very important, especially if you make a voluntary after-tax solo 401k contribution, because the purpose of making voluntary after-tax solo 401k contributions, which is part of the Mega Backdoor Roth strategy, is to indirectly get more Roth funds into your Roth solo 401k. So you want to convert that voluntary after-tax solo 401k contribution immediately to the Roth solo 401k. It's also worth noting that you cannot make that voluntary after-tax solo 401k contribution directly to the Roth solo 401k. If you do that, it will not be considered a Mega Backdoor Roth conversion in the eyes of the IRS regulations. So that's very important. Now, this slide breaks down the Mega Backdoor Roth strategy. So the designated account, that's where you make the contribution, that voluntary after-tax contribution to that after-tax solo 401k holding account, aka bank or brokerage account, and then immediately convert it to the Roth solo 401k or Roth IRA. Then you need to complete our online conversion form if you're a client of my solo 401k financial, so that we collect the necessary information to issue that form 1099-R. And then once we collect that information, we'll issue the form 1099-R to the IRS and a copy to you. And that's all covered in our annual fee. We don't charge additional fees for issuing the form 1099-R as long as you timely request it. Okay, hopefully that answered your question. So again, I shared the banking guide as well, and we can also speak to your banker if he or she has any questions. We can have the individual speak to a member of our account service department. All right, let's see here. Got another question here. I started a consulting business in late 2025. I plan to file 2025 taxes and sole proprietorship and create an LLC taxes S Corp in January. Can I open a solo 401k now under my own name and later convert it to the LLC name? So I plan to file 20 and create. Okay, so yes. So the answer is yes. So the solo 401k would be sponsored by your sole proprietorship for tax year 2025. That's number one. Number two, contributions to the plan would be based on your sole proprietorship Schedule C for tax year 2025. So contributions for tax year 2025 would be based on your line 31 of your Schedule C, and you would have until April 15, or if you file for an extension, October 15 of 2026, to make all contribution types, employee, employer, and voluntary after-tax solo 401k contributions if you open the solo 401k plan by December 31st. And then next year, the plan can be amended to list that the self-employed business is now your LLC, taxes and S corporation. Good question. And then going forward for tax year 2026 and future years, contributions to the plan would be based on your W-2 wages from your S corporation, since the plan would have been amended to list your updated self-employed business being the S corp or the LLC, taxes and S corporation. Okay. Let's continue here with today's topic. Thank you for the good questions there. So back to my slides here. So we've been discussing what is the deadline for solo 401k contribution. Let's continue with this slide here. We already talked about the deadlines. Now, let's keep covering. So we've been talking about the deadlines for sole proprietors, S corps, LLCs. We've talked about, let's talk about Roth. We've talked about Roth, pre-tax, and Mega Backdoor contribution deadlines. We've talked about how extensions impact contributions. So let's talk a little bit more about the Mega Backdoor Roth. So you have until December 31st of this year, 2025, to open that solo 401k plan. So that way you don't have to worry about it next year in 2026 with regards to opening the plan. So if you open the plan by December 31st of 2025, you're going to be able to make voluntary after-tax solo 401k contributions, which is part of that Mega Backdoor Roth strategy. Now, that's true for all self-employed business entity types, whether an S corp, partnership, or sole proprietorship. If you wait till next year in 2026 to open the solo 401k plan, that means signing the plan documents, because it's the plan documents that determines when the plan's effective, when you sign those plan documents. So if you wait to open the solo 401k plan on January 1st of 2026 or after, then from the Mega Backdoor Roth solo 401k strategy perspective, if you're a sole proprietorship or LLC tax as a sole proprietorship, you're going to want to open that solo 401k plan by October 15 of tax year 2026 so that you can make voluntary after-tax solo 401k contributions for tax year 2025 based on your Schedule C self-employment income from tax year 2025. And then you're going to have to make that voluntary after-tax solo 401k contribution by October 15 of 2026 for 2025. And then you can convert those voluntary after-tax solo 401k funds in 2026 to the Roth solo 401k or the Roth IRA. So don't confuse the conversion rules with the contribution deadline rules. On the other hand, if your business is taxed as an S corporation or a partnership, and you wait to open the solo 401k plan on January 1st, 2026 or after, and if you file for a business tax return extension, then you can open that solo 401k plan by September 15 of tax year 2026, and you're going to be able to make contributions for tax year 2025 based on your tax year 2025 1120S tax return or your Schedule K1 if your business is a partnership. And you're going to be able to make those voluntary after-tax solo 401k contributions by September 15 of 2026 for tax year 2025. And you need to make sure that not only you open the plan, but you make the contribution by September 15 of tax year 2026. So that's very important. So in order to avoid mistakes of missing the contribution deadlines, I always tell prospective clients, open the plan up by December 31st of tax year 2025. So that way you're going to preserve the right to wait and make all your contributions, employee and employer and voluntary after tax, in 2026. So you don't have to worry about all these different deadlines. Okay. So if this information is helping you to feel more confident about your future, please take 1 second to like and subscribe, as it tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing also guarantees that you receive notifications of crucial content that we deliver every day to help you secure your retirement. So here in my solo 401k financial, we take care of ongoing reporting as well, as long as you timely request it, because we don't have access to your funds. With the plan for my solo 401k financial, you get to choose where to hold your funds. They can be held at your local bank, credit union, or a brokerage firm like Fidelity or Schwab, or if you're an institutional advisor, they can be held at Altruist, for example, or Fidelity or Schwab, depends on who you clear through. We have a lot of institutional advisors that utilize our services for their solo 401k clients, whether they're clearing through, it depends on which broker dealer they clear through. So we let you decide where to hold the funds at. And we'll handle the reporting for the plan, such as Form 1099-R, Form 5500 Easy, as long as you timely request these services. And that's all covered in our annual fee, as long as you timely request the services. We'll also assist with opening up the bank brokerage accounts, helping you transfer funds to the plan. Our plan also comes with the auto contribution credit, which is a $1,500 credit over a 3-year period. Even though it's called the auto contribution credit, you're not required to contribute in order to qualify for it. You can opt out of contributing, and you can still contribute up to the overall limit for the year, as long as you have enough net self-employment income. It's a $1,500 credit is spread out in $500 increments over a 3-year period. You'll file Form 8881 each year to claim that credit. We provide a video and a PowerPoint on how to fill out that form. All right, that's all for today's session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here in a couple hours with more crucial content. Until then, have a good rest of the day.